So many of you guys are tired of day trading or just want to make money swing trading. So in this video, I'm going to break down my swing trading strategy that I would use on a day-to-day basis to make anywhere from 20 to 50,000 per month. I will break down exactly what I look for, how I want to enter these trades, where your targets should be, and how you can replicate the exact same process. So let's go ahead, dive right in so you guys can learn exactly how I do this. Now, before I do that, you guys need to get this video to 100 likes so I can give you guys a more in-depth detail on exactly what I do to day trade, to swing trade, and in my option strategies to get to $50,000 per month consistently. Get this video to 100 likes and I will upload the 1-hour video recording that I made last week as soon as you guys get there. Let's go ahead and dive right in. So if you guys don't already know my scan criteria here for finviz, you can go ahead, take a screenshot. It's right here. Pretty much what I'm looking for is relative volume over 1, at least 500K in volume, and an average true range of 0.75 and higher. So this scan right here, you can put it on. Essentially going to bring you stocks that have some sort of volume. And what I do is put my mouse over here, look for the little mini chart that pops up, and see if I find anything of value on that mini chart. So like AVGO is interesting. It's got a gap up here, but obviously super extended to take a swing on. So let's keep going and see what we can find. All right, ACHR. This is interesting. So let's pull up ACHR. Why is it interesting? Because when you're looking at this, you almost have some sort of a double bottom setting up here. You have a nice price action right here. Let me clear this stuff. You have nice resistance right here. And then above this resistance, your next point is at 984. Okay. This move right here from 860 to 984 is a 14% move. So the underlying can move 14%, right? So how are you going to swing trade this? One, you're going to pay attention to the volume profile, which you can see on the moves up, volume is increasing significantly. And on this last candle right here, volume in fact spiked. So these are all good things going for you. Now, how do we turn this into a swing trade? Well, we need to wait for a daily candle to close above this 864. And as soon as we get a close above this 864, we could take 2 to 3 weeks out expiry, 1 or 2 out of the money, delta of 0.4 to 0.5. So these are the criteria you want to look for when you're looking to take that swing. If you're not going to do it with equities and you're going to do it with options, this is what you want to look for. You want to make sure that 1, you have 2 to 3 weeks out expiry. 2, you are only going 1 or 2 out of the money. And 3, it has a delta of 0.4 to 0.5. Now, how do you establish whether this daily candle is going to close here? Well, you need to wait at least 10 to 15 minutes before market closes to establish whether or not that candle is going to close above that daily level. Right? So why do we do that? We do that because if the candle pops up here at 9:30 in the morning and we buy a call expecting this is going to close, we're pretty much anticipating this candle close above this 864. So we have to wait for 5, 10, 15 minutes before the market closes. So the chances of this daily candle closing above this level now becomes a lot more likely. Now, when we get that candle close, obviously our first target is going to be the most recent high up to the left, and that's going to be 984. And with 2 to 3 weeks out expiry, you're giving it enough time to kind of pop up here and show its hand. All right. Number 1, candle close above daily pivot. Number 2, choose correct options. And number 3, take profits. All right. So these are the key things you want to look for. All right. Now, this move right here, since this is a 14% move, on the option side, you can actually get close to maybe 200%
on this 14% move. 14% is a big move depending on how quickly it gets there, how fast, right? So that's all factors when it comes to option pricing, but a 14% move on the underlying with options is pretty significant. Ultimately, you could take it just with shares and you know your risk there and how much you will make, obviously 14% on that. All right, let's go ahead and try to find another one. So Lyft is an interesting one. We can see Lyft gapped up here, but in fact, it's losing a lot of momentum here. So this daily candle is closing inside our level. Okay, we have a level here. This 200 moving average is being sliced. Now, if we have to look down to the left here, guys, down to the left is going to bring us right to this level, right? So ultimately, we can say that with this weak candle close and the volume spiking on the sell side, in the next few weeks, we could see this come right back to this downside support, right? From 1487 to 1286, we have a move of about 13%. That's, again, going to be a good number to get some option movement, right? You always want to find things with meat on the bone because it's going to give you the most chance of success. So with this said, and given the fact that it's already sold off a few days, in this scenario, you want to buy at least maybe 3 to 4 weeks out. So you give the stock the ability to kind of consolidate, bounce back, maybe retest the moving averages, and then continue in its path. The overall trajectory is aiming to go downwards, right? So with the volume spiking, it's in a downside, pocket. It's got room to the next support. At this point now, you want to buy 3 to 4 week expiries. Same rules apply, 1 to 2 out of the money, and then a delta of 0.4 to 0.5. And you want to wait for this thing to ride back and hit your first target. Okay, with a 14% move, again, you're going to be at a place where you're making anywhere from 100 to 200% on the option side of things. Now, where do you stop out? Essentially, when this no longer works is when price comes back up and closes above this level of 1480. Okay, so that's going to be your stop. That's going to be where you exit the trade because now you have a fake breakdown and it goes the other way. Let's find another example. All right, so came across DDOT. All right, remember, you don't always have to be bullish. This is the great thing about options. You can find bearish setups and swing trade bearish strategies, right? So in this case, in this scenario, we have what? We have a head and shoulder setting up. We have a bearish engulfing candle, and we have two dojis here kind of showing indecision, and then the bearish engulfing comes in. We also have recently a spike in sell volume, so a few things going for us on the downside. However, still not ready to buy a swing trade on the put side. So what are we waiting for? We're going to wait for this 150.6 or maybe 150 psychological number. Okay, we're going to draw our line here at 150. Great. Now we know that if we get under 150, we have a head and shoulder that triggers. We also lose the 20 moving average. We had a bearish engulfing candle, and we can continue taking this trade for a swing to the downside. So what are we waiting for? We're going to wait for a candle to close under this 150 level. And then when that happens, where's our next level of support? We go down to the left, right? And when we go down to the left, we cannot neglect the moving average. Yes, your big support is all the way down here at 120, but you do have a 50 moving average sitting right here at around 136. So that's a big pocket. That's a big level that you can kind of fall towards, right? 9% on a $150 stock. Again, it's going to pay you significantly well. So we wait for a day, or we set our alerts at around 150, and we wait to see if we get a candle close under that 150 level. Confirms the head and shoulders, confirms the break of moving average, and confirms the price action below 150. Once that happens, we take 2 to 3 weeks out option contract, aiming for at least a good 70 to 200%, depending on how fast it moves, of course, but giving ourselves time, right? The more time you give yourself, the better, because it's moved down a little bit. Some consolidation can happen. You don't want to get shaken out of the trade. So give yourself some time. And ultimately, when it starts making its way into your target, you want to start shaving off profits. You never want to hold, 4 contracts all the way down to target. Take one off, take one off, take one off. Let your last one hit those higher percentages. Okay. So just like you guys saw, use finviz, found setups that I like, ones that have meat on the bone, and those are the criteria I look for to take some swing trading positions. Hopefully you guys understood something from this and learned something from this.
So I just showed you an exact strategy that you can use for swing trading. If you're a busy professional, can't spend time on the computers, all you really have to do is tune in 10 to 15 minutes before the market opens, open your swing trading positions, and then just monitor those in the days to come. Now, if you want to be able to work with me one-on-one to learn these strategies on a more personal level so you can be guaranteed to make anywhere from 10 to 20,000 per month, click the link down below, see if you qualify to work with me one-on-one, and if you do, I will reach out to you personally and get started with you. And if you're not ready to work with me one-on-one, all you have to do is watch this video right here. It's a free training that'll help you become a better trader.